But so people are asking, is it a good time to refinance? Now, refinances are always circumstantial. A good time to refinance is when you need to refinance. It's not always and can't always be based on what the interest rate is. The deciding factor is, well, how does this refinance help you now? It's not, can I time the market, get a quarter percent lower? You may not even benefit from that. Now, there are many reasons, more than I can mention, for why somebody would want to refinance. Some examples would be consolidating debt, which is usually the biggest, more popular one. Refinancing to pull out equity so that you can have equity to put towards another purchase if you want to buy an investment property, putting your kids through school, so on and so forth.
Yeah, what I'm hearing is like exactly that. A good time to refinance is when it's going to make a meaningful impact to your life and that of your family. So that could be in conjunction with Bank of Canada or these bond yields falling and rates getting better or not. But as long as it's math, it's really just comes down to math and how it can be leveraged to suit your particular needs.
And so waiting until rates drop or trying to time the market for a refinance could actually lead to things like missed opportunities. It could lead to you having to pay higher interest on your credit card debt or any other kind of debt in the interim while you're waiting. So you end up paying more interest anyway, only to save later on. So sometimes it ends up being a wash, or just having the available equity or liquid funds to make decisions soon enough, regardless of what you're using the money for. And so, is now a good time to refinance? Well, yesterday would have been a good time to refinance as well. I guess again, it's just all circumstantial. But one thing that's undervalued, and this is kind of where people start to get in their own heads and overthink it, what are the benefits of refinancing? Do I want to refinance? Do I want a larger mortgage? Because that's ultimately what refinancing does, is your mortgage grows and gets bigger over time the more times you do it. Again, this is all assuming that every time you refinance, you are looking for more equity. Because otherwise, if you're not looking for more equity, you're either looking for a better rate or you're just changing banks because you hate your existing bank, which is usually not motivation enough. Is having a bigger mortgage a bad thing?
I don't think so. I mean, to be honest, if you're just getting a bigger mortgage with no goal that you're trying to achieve, then yeah, certainly. If you're doing it for nothing, but most often than not, people refinance for various reasons, and usually it falls down to like renovations or debts for the most part. And there are little things in between. But if you're renovating your home, what's the best form of borrowing? If you do it from an unsecured line of credit, a payday loan, credit cards, those are high interest debts that you're leaning on. However, with mortgages, it's probably one of the lowest forms of borrowing. So if you use a refinance to increase your mortgage, yes, it's growing, but it's growing so that you can reinvest that money into your home. So again, if you're going to do that anyways, this is the best way to do it is through a refinance. In terms of debt consolidation, you're not going to refinance if it doesn't make sense. If you have 10 unsecured debts and you have one mortgage with a low payment, technically zoom out and add everything up. And if it ends up being, let's say, 5 grand a month, and this refinance, which yes, grows your mortgage, but your payment overall amongst those 10, 11 things drops to so your mortgage increases from 3,000 to 4,000, but your overall payments when combining the debts falls from 5,000 to 4,000. You're saving $1,000 a month on cash flow, right? On your expenses. So in that sense, when you zoom out, it totally makes sense to consider refinancing for that purpose because you can do a lot with $1,000 a month, even if it's just reinvesting it, or you take that extra thousand, pump it back into the principal, and just get ahead.